Explain in details the concept of financial education. How does it work? This is a very necessary lesson everyone must learn. So stick to the video till the end and comment your advice in the comment section. Don't forget to like, share and subscribe for more advices. Let's go. Financial education is the process of learning about financial concepts and strategies in order to make informed and effective decisions about managing one's money. This can include learning about budgeting, saving, investing, credit and debt management, and retirement planning, among other topics. One way that financial education can be delivered is through formal education, such as classes or workshops offered by schools, colleges, or other educational institutions. These classes may cover a wide range of financial topics, and may be tailored to different age groups and income levels. Another way that financial education can be delivered is through informal education, such as through books, articles, videos, and online resources. These resources can provide information on a wide range of financial topics, and can be accessed by anyone with an internet connection. Financial education can also be delivered through one-on-one counseling or coaching, either in person or over the phone. This can be particularly useful for people who need personalized advice and support as they work to improve their financial situation. The main goal of financial education is to empower people with the knowledge and skills they need to make informed decisions about their money, so they can achieve their financial goals, whether short-term or long-term. This can include understanding how to create and stick to a budget, save for emergencies, invest for retirement, manage debt, and improve credit scores. Financial education can also help people understand the role of financial institutions, such as banks and investment firms, and how to use their services effectively. Overall, financial education is an ongoing process that can help people of all ages and income levels make better decisions about their money and achieve their financial goals. Reasons of poverty. There are many reasons why poverty persists around the world, but some of the main causes include 1. Lack of access to education and job training. People living in poverty often lack the education and job skills necessary to secure well-paying jobs. Without these skills, they may struggle to find work that pays enough to support themselves and their families. 2. Limited access to healthcare and basic services. People living in poverty often lack access to basic 3. Healthcare and other essential services, such as clean water and sanitation. This can lead to poor health and reduced productivity, which in turn can perpetuate the cycle of poverty. 4. Lack of economic opportunities. People living in poverty may live in areas with few economic opportunities, such as rural areas or inner cities. Without access to jobs and businesses, it can be difficult for them to improve their financial situation. 5. Discrimination. Certain groups of people may face discrimination in the job market and in other areas of life, which can limit their opportunities and make it more difficult for them to escape poverty. 6. Natural disasters and conflicts. Natural disasters, such as hurricanes and earthquakes, and conflicts, can disrupt people's lives, destroy their homes and livelihoods, and make it more difficult for them to recover and lift themselves out of poverty. 7. Inadequate government policies. Poorly designed government policies, such as lack of social safety net programs, or lack of investment in infrastructure and economic development can also contribute to poverty. 8. Inequality and lack of social mobility. Inequality and lack of social mobility can trap people in poverty and make it difficult for them to improve their lives through their own efforts. 9. Macroeconomic factors such as inflation, unemployment, and slow economic growth can also lead to poverty, as they can make it difficult for people to find jobs and make ends meet. Measures to overcome poverty. There is no specific measure that is guaranteed to help an individual overcome poverty, as poverty can be caused by a complex set of factors such as lack of access to education, job opportunities, and social services. However, studying fields such as social work, urban planning, public policy, and business can provide a person with the knowledge and skills to help create and implement programs and policies that can address poverty at a systemic level. Additionally, studying fields such as engineering, computer science, and healthcare can lead to well-paying jobs that can help lift individuals and families out of poverty. It's important to note that obtaining a degree alone may not be enough to overcome poverty, and other factors such as access to job opportunities and social services, economic conditions, and personal circumstances also play a role in an individual's ability to lift themselves out of poverty. Difference between asset and liability. An asset is something that a company or individual owns that has monetary value, such as cash, property, or equipment. A liability is something that a company or individual owes, such as a debt or an unpaid bill. In other words, assets are resources that can be used to generate future economic benefits, while liabilities are obligations that will result in an outflow of resources. Different examples of assets and liabilities. Assets: cash and cash equivalents. Investments: stocks, bonds, real estate. Accounts receivable: money owed to a company by customers. Inventory: goods for sale. Property, plant, and equipment: buildings, land, vehicles, machinery. Liabilities: accounts payable: money a company owes to suppliers. Loans and mortgages. Credit card debt. Taxes owed. Accrued expenses: expenses that have been incurred but not yet paid. Conclusion: to overcome poverty, never ever buy a liability. Always go for an asset. Subscribe for more. Remote Classroom.